Hello, my name is Kurowski. I have been for about a decade now a vociferous critic of the current bank regulations, those regulations coming out from something known as the Basel Committee for Banking Supervision and that are basically globally applied. I have asked my questions in all type of venues, conferences, blogs, articles, even formally as an executive director of the World Bank back in 2002, 2004, when precisely the Basel II were being discussed. But I have never been able to extract one single answer to my questions from the regulators. And so then, the other day, when I saw a new format, quite interesting format, mind you the format, I decided to try it out, and therefore I have invited a very important, prominent bank regulator to sit down invisibly in this chair, a more comfortable chair than the one I saw used the other day, even with some water, just in case, to try to have a conversation with him. And so that is what I will proceed to do. Dear Mr. Important, Prominent Bank Regulator, I want to make two questions today. You know I got hundreds, but I'll stick to two. Number one, the pillar of your bank regulations is something called the capital requirement for banks based on perceived risks. Risks basically perceived, mostly perceived by credit rating agencies or the bankers. And these establish that the higher the perceived risk is, then the higher the capital the bank is required to have. And the lower the perceived risk of the borrower is, the lower the capital the bank is allowed to have. That sounds very logical, but if we just consider that all bank crises, all major bank crises ever, have resulted from excessive exposures to what was erroneously but still considered absolutely safe, and that no major crisis has ever resulted from excessive bank exposures to something considered as risky, could we not argue that those capital requirements are basically totally wrong, 180 degrees off the mark? That in fact we could be thinking of slightly higher capital requirement for what was perceived as absolutely safe and lower requirement for what was perceived as risky? I'll leave you to that, to think about it, and go to question number two. The Western world, Europe, America, we have become what we are in much based on our willingness to take risks. When I say willingness to take risk, I don't refer to the normal citizen, because we are risk adverse, but we have instruments that take risks for us. And one of those agents of risk taking have precisely been the banks. How can you think of us becoming a safer place if our banks stop taking the risks we need? I just don't get it. We need the bank to go to the risky small businesses, go to the risky entrepreneurs, figure them out, give them access to bank credit, and give us a chance to get a new generation of jobs, growth. Have you never ever thought, for instance, about the possibility of capital requirement for banks based on perceived job creation ratings? Yeah, no, I hear you. You tell me once again, it's all the fault of credit rating agencies and of bank bonuses. But credit rating agencies, they are human. Sooner or later, they will make mistake. That's no question about it. And the more importance you give them, the bigger will the consequences of their mistakes be. And bank bonuses, well, the reason the bank bonuses have been so high is because they don't need to compensate capital. The less capital, the more leverage, the higher return on capital and the more room it is to give the bankers the bonuses. If for instance, in some cases, the banks are allowed to lend to an absolute safe sovereign without any capital, zero capital. In those cases, you really are telling the banks, you don't need shareholders. This is all a question, a deal between governments and bankers, and forget about shareholders. So those bonuses will disappear very fast if you raise a little bit your capital requirements on your absolutely safe. I don't know what to do. I don't know, you will not answer. But the Western world needs risk-taking. Risk-taking is the oxygen of development. Risk-taking keeps our bicycle moving forward. If there is no risk-taking, that bicycle will stall and we will fall. And you will be, in my mind, you are to be blamed for that. Please, try to react, answer, dare a question, dare an answer. And if not, well, I guess I have to go back to you again and please beg for your support in trying to pressure these prominent, important bank regulators who live in a little mutual admiration club to answer to us, to answer our questions. What are they doing? And I think that my questions are fair. Don't you? Thank you.